The biggest money scandals of the last 100 years. Hey, lovely people, let us dive into the world's biggest money scandals that have taken place over the last 100 years. Number 10. Halliburton Scandal. Halliburton is still a huge name in the industry and one we did not expect to have been involved in a scandal. The company was exposed by Tony Melendez for violating accounting as well as company rules. No action was taken initially due to their share value being affected. The SEC finally took care of the situation and made them pay a fine. In complete honesty, this scandal is nothing compared to the rest of the scandals you shall see on this list. Number 9. The Ponzi Scheme by Bernie Madoff. The man had a mindset of a con artist right from the start. Bernie Madoff opened up his venture in 1960 with mere $5,000, and within the decade the man involved his business activities in fraud. Not just any normal fraud, but a fraud that the world of business would know for a lifetime. The money kept coming in, feeding into Bernie's lavishly greedy lifestyle. The investors who came for withdrawals were also paid with this money, and forged documents with incorrect digits were given as proof to customers and other regulators. In 2008, Bernie was exposed royally in the worst way possible, as he had to come out clean to his sons, who went straight to the higher authorities to lodge a complaint. But Bernie was too smart. In that short span of time, he stole an amount of $17.5 billion from around 4,000 investors, as well as from his feeder funds. Bernie was sentenced to 15 decades in the jailhouse, while the other companies that had links to him were given fines. JP Morgan was one of them, and they had to shell out $2.6 billion in the year 2014 towards this cause. Number 8. The Emissions Scandal by Volkswagen. At number 8, we have an automobile manufacturer and owner being involved in another notorious scandal, the emissions scandal. As it is quite obvious from the name itself, the scandal involved lying about the emissions released by the cars produced by the German manufacturer. So long story short, a computer program was created that would calibrate the emissions released and would also enable the minimum amount of emissions to be generated. Unfortunately, this was only partially true, as when the car wasn't in testing mode, the emission levels reached almost 40 times the regular levels. The cars were in full production from 2009 till 2014, where they were caught by researchers from West Virginia University who proved the existence of these discrepancies. Almost 100 million cars had to be recalled back, and the cheating software had to pay $4.3 billion as fines for the criminal as well as civil offenses that were committed. Number 7. The Vegetable Oil Scandal. The name of the scandal that comes in at number 7 is indeed one that caused heavy damage to a company that dealt with vegetable oil. Allied Crude Vegetable Oil Refining Corporation made its debut in the industry in 1955 by Anthony Tino DeAngelis. The company, on gaining massive returns on their vegetable oil products, started to branch out into selling soybeans and cotton. Anthony wanted to fool the auditors with his inventory and placed barrels of oil with water to fool them. He claimed to have a vegetable oil inventory of $150 million, when in actuality he had just $6 million. By the time he was exposed, he had looted 51 companies in terms of loans and bought 90% of the future stock for the soybean oil, which was his major target to help raise the price of vegetable oil. Unfortunately, the market crashed and DeAngelis was caught, unable to pay off his debt. He had to serve a 7-year sentence in the jailhouse. Any guesses on how much he owed his debt? The man owed a whopping $175 million, which in today's time would equate to $1.4 billion. Number 6. The bre-x Minerals Scandal. The scandal making its entry at number 6 is one that involves a penny stock and the real truth behind its existence. David Walsh hit jackpot when geologist Michael de Guzman stated to have located the largest deposit of a certain soil sample in Indonesia that could contain 70 million ounces of gold deposits. Investors went mad and started investing in bre-x, resulting in the stocks skyrocketing. Later, it was found out that no gold existed and that de Guzman was getting his wedding ring shaved into the soil samples to dope the people. Now, the details of how de Guzman died are still a mystery, as some claim he fell from a helicopter and was a sweet treat for some scavengers and carnivores below, while others state this was an escapade to get away from the brutality of the punishment that he had to endure. No money was recovered, and no one had to face the jailhouse. It truly was a lesson to the entire world to take caution before involving yourself with penny stocks. The list so far has given us chills to our bones. We can't wait to show you what scandal lies at the top 5 spots, but before you move on ahead with the video, like the video to support us. Number 5. The Enron fraud. The Enron fraud is one that has been quite of a legend of a scandal that has made history with the level of fraud that it was involved in. Enron was a leader in the natural gas industry and even made it to the Fortune 500 list at the 7th spot in 2001. The company was said to execute $2.5 billion daily via its trades. But in 2011, the company came out in the open and stated that they were $618 million in debt. Such a huge company filing for losses in the millions shocked the world. The accounting work was then looked into by professional accountants and analysts. CEO Ken Lay and Jeffrey Skilling were found guilty and were banished from ever serving higher posts in a trading company ever again. The investors faced the brunt of the consequences, and the stocks that were worth $66 billion skydived into holding a worth of zilch. Nada. Absolutely nothing. Number 4. WorldCom scandal. The Enron scandal and the WorldCom scandal played out around the same time frame, though it wasn't as bad of a scandal as Enron was. WorldCom was leading the telecommunication industry. The company reached a market capitalization of a total of $175 billion. This was followed by the dot-com crashing, resulting in CEO Bernie Ebbers going broke, losing his job, as well as the truth coming out about how he scammed the whole company. The man had shares in WorldCom, and he used it as collateral that had a worth of about $400 million in terms of loans that he had taken to cover marginal costs. This was still nothing. The accountants working for the company mentioned the expenses as investments on paper, which attracted a lot of investors to them. The fate of what happened in the end is quite obvious. WorldCom went bankrupt in 2001, and investors lost their hard-earned money. This was the scandal that resulted in the Sarbanes-Oxley Act coming into existence. Number 3. The Olympus scandal. Due to the Sarbanes-Oxley Act coming into action, the Japanese camera producers Olympus were caught in the midst of it. With the weakening dollar and its investment in real estate wasn't doing so well either, the Japanese market exploded with losses sending back everyone home with little to no money. Olympus did not give up and indulged in a riskier investment, thus involved hiding their losses for years together and indulged in creating shell entities to whom the investments were sold at the original price. Laws got tighter, and so did the situation Olympus was in. The year 2011 exposed the multiple frauds that they had committed over the decades and involved them paying fines as well as facing jail time. Number 2. Tyco scandal. At number 2, we have a cybersecurity company caught in the middle of a scandal. What an irony. The company was doing amazing for quite some time and was valued at a price of $120 million. L. Dennis Kozlowski was the man behind its success, and his greed got to him really badly. His lavish life was expensive, like really expensive. Wonder where he funded his lifestyle from? Yes, it indeed was from his company, and that took a massive $500 million. The best part about the fraud was that when it was exposed, more than looking into ways of holding him accountable, people were all flattered by the ways he spent his money. Though he went to jail eventually, he got to enjoy the money on Sardinia, an Italian island where he had a massive orgy party, Romanian style. At least the man entered jail after enjoying his billions, unlike the rest on this list. Number 1. The McKesson and Robbins fraud. The scandal that comes in at number 1 is a financial scandal that was a game changer as it forced auditing reforms as well as appropriate governance of the corporate body to take place. The company was doing quite well in its time and was one that dealt with products such as cough syrups, quinine, and milk of magnesia. Philip Muzica, who was a felon who had been convicted twice, bought over the company in 1925. At that point, he was working under a false name, F. Donald Coster. The company was quite successful, but greed made Muzica take a few extra illegal steps that included the creation of a fake company that contained counterfeit contracts and inventory so as to enable him to pocket the profits. The truth finally came out when suspicions arose and the treasurer was not able to make head nor tail of the huge transactions that were being made. The credit reports seemed forged and the SEC was immediately notified. On the SEC's notifications, Muzica was caught red-handed. He was eventually released on bond, following by him committing suicide. The people who had placed their investments in the company got nothing in return, and this caused an uproar by the masses. The American Institute of Certified Public Accountants had to modify the entire system of handling finances due to this scandal. With those scandals, we come to the end of our video. Do punch the subscribe and like button to support us. Sayonara!